Hello everyone and welcome to today's morning report on Friday the 23rd of January with me, Rich Perry, market analyst at Tech Markets. So Mario Draghi has fired the big bazooka and the markets have lapped it up really. The fact that Draghi had announced 60 billion rather than just the 50 billion that the market had been briefed on meant that it came in larger than expected, and the market has taken that as a very much a positive. Yesterday, strong gains on equity markets. Today, that has continued. DAX is up again another 1%. Markets across the board, pretty much, from Wall Street to Asia and again into the European session, have been strong. Bond yields are down. Also, the euro is again strongly lower, so the market has reacted accordingly to this news. We move on though. We've got the Greek elections on Sunday, and could that derail this positivity that is flooded through the markets on the back of this QE? It'll be very interesting to see, because Syriza, the anti-austerity party, lead in the polls, and if they win the election, that could sort of usher Greece towards the exit of the Eurozone. So it'll be very interesting to see the market reaction next week to that. Also, further news overnight: we've had the unfortunate death of the of King Abdullah of Saudi Arabia, and the market is sort of speculating on, very slightly speculating on whether that would change the Saudis' approach to oil and oil production. Oil price initially spiked a little bit higher on the back of that, but since that announcement of his death, the oil price has just started to sort of come back again. And it's pretty much flat on the day now in terms of WTI and crude, not too much in terms of upside. And you can see this WTI price continues to basically trade sideways over the past couple of weeks. So, FX-wise, I've got this the long-term chart on the dollar index. It shows a break above the 92.63 key highs of 2004 and 2005. And that means we're back in terms of the dollar at 10-year highs on this dollar index. Incredible move. That was 92.63, and we've spiked higher on that. Euro ECB news from yesterday, and the euro weakness subsequently. So very strong. Also, we've got volatility in the States, which is now back towards a 3-week low on the VIX. So as I said previously, falling VIX just helps to show strong equities in the US. So that's certainly what we're seeing at the moment. So in terms of today, the FX markets, pretty much dollar strength across the board, apart from the dollar yen, which is slightly lower, about 20-30 pips lower. Bit of yen strength there overnight, so it's the only real blot on the copybook today. But at the moment, the dollar remains very strong, and euros over 100 pips down, which is interesting. So, market data today, we've got UK retail sales at 9:30, expected to come down slightly on the month-on-month figures by 0.7%. But still, the annualized data suggests it's going to be a growth of around about 3.3% actually on year. We've also got the PMI data for the States, and the flash manufacturing PMIs for China came in slightly better than expected, which has also helped a bit of risk appetite today. And the Eurozone numbers, although Germany was slightly down, the composite euro figure was bang in line with the 51.0 that the market had been expecting. So that was also taken, or should be taken, as a relatively supportive number. And this afternoon at 2:45, we've got the US version, which is expected to improve very slightly to 54.0. Also today, we've got the existing home sales for the US. That's actually expected to buck a bit of a trend of correction. Actually, it's expected to see about 3% growth to 5.06 million. So that would be, again, dollar supportive if that were to be seen. So that takes me on to my euro yen chart, which is the chart of the day. And on the daily chart, this is quite a long-term, sort of 18 months look at it, and you've seen this 135 level of support, which has now been decisively broken. We had that level of support that held last week, but this was just a pretty much of a damp squib of a bear market rally. The RSI only unwound to 30 and is now come off again. That is a pretty negative signal, and this is just in keeping with this whole general euro weakness that we've got. We've also broken below that 134.10 mark that we saw back in October as the spike low. That's been decisively broken now, and zoom out and you sort of come back towards these lows that we saw back in November 2013, and that next real key low comes in at 131.20. So that is your next level of support really that you're looking out for on this chart. But it certainly looks like momentum indicators are very negative across the board. MACD lines, RSI, all in negative configuration. Now, if my chart comes back, which it does nicely, this is the intraday hourly chart, and look how 135 broken down yesterday. 135 has become the basis of resistance, so you'd be looking out for any sort of technical rally. The RSI is near term bit stretched to the downside on the hourly chart, so perhaps there is scope for a bit of a technical rally near term. So you'd be looking out for a rally probably back into that resistance area, sort of 134.20 towards 135 as an ideal selling area. But certainly looks like we're going to get further weakness in this euro yen chart, and I think any sort of rally is a chance to sell. So that leaves me to wish you good luck in your trading today, and I will speak to you later. Thank you.